Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's March 27th, last week of the quarter here. So it'll be interesting to see how the first quarter translates into next month when we start seeing the first data here for the first quarter of 2017. We got no economic news releases scheduled for today. We do got some important stuff like the core PCE coming out today, or coming out this week, some other important data coming out this week, but today happened to be the lone day that's pretty quiet. Here's what's going on here. The stock market's down. It's kind of basically taking its cue from last week, the aftermath of the healthcare bill postponement. So basically, again, they didn't have enough votes, so basically they decided to postpone it. And of course, investors are growing, are starting to lack confidence in Trump and pushing his agendas through, his bills through Congress, and basically this is their way of having a correction and potentially if he doesn't if he doesn't get a win soon, this could go down even further since everything came up so fast on excitement that he's going to get all these things through. Now all of a sudden things are looking a little bit more muddy, and so of course the stock market is now pulling back a bit now on their enthusiasm. The VIX also is at a high, so we're up just over 14. The 20 is basically where the median is, but it has shown some. This is kind of like their gauge for investors' gauge for feeder gauge, and it's reaching that 20. It's been rising here in the later parts here, and right now it's just over 14. So that's another thing that investors are probably looking at right now, and why you're starting to see some a bit more sell-offs the last few days here. There are a few Fed speakers speaking today, so I don't think there's going to be a whole lot that's going to be said that's out of the norm that would spook the markets, but you never know. Sometimes there's some speakers out there that will say something that will catch their investors' attention, and then the investors will react in a dramatic fashion here. So but today's speakers, none of them are really that much where they're kind of loose with what they say, so they're pretty straightforward. We kind of know what to expect from them, and I don't foresee anything happening with that, but you never know. Okay, here's the bond market. We got a nice jump here. We actually started the day up above the second day resistance. As you saw, we had a couple days here, Wednesday, Thursday, and Friday. Basically, we all tested the second resistance, got pushed back, and basically all the time landed right on that first line. Today we have a pretty big opening gap and opened just above the second, and even though we're down for the day so far, we're up about 25 basis points from where we left off on Friday. So nice little start, and then of course a nice little start of the week for better interest rates. So interest rates have improved, as a matter of fact. We are reaching the levels of the best levels we've had this year, so we could maybe reach that, and then just be a little careful in this range, because if we reach that levels, we did get pushed down, as you saw, or down this way, we could potentially get knocked back down again. So just be a little cautious here. We do have a few things on our side with the the failure of the healthcare bill getting passed. We do got Brexit coming up that hasn't been talked about, but I think can again, there might be some more conservative movements in the markets in lieu of, in care of basically of Brexit. So you may see some movements that are coming up. That's my feeling anyways. All right, folks. So a little bit better pricing today, which is good news. And if you guys want more updates throughout the day, just come over to Twitter. I'm underneath Mike Bjork here, and follow. All right, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Later.